So today I would like to talk about Adidas. So the shares dropped about 5% in the last few days, and this also has a reason. So they started a campaign with Bella Hadid, which has Palestinian roots, and this campaign included shoes from 1972 Munich Olympics. So at this time, 11 Israelis were murdered. So now we have many Israelis or people that supporting Israel boycott Adidas because of this campaign. But the other thing is, we also have Palestinians who want to boycott Adidas right now because they canceled this campaign and they also apologized for the mistake. So this is definitely a problem for Adidas because now they get boycotted by two different peoples. They get boycotted by Israelis and Israeli supporters. They also get boycotted now by Palestinians and Palestinians supporters. So it's a very bad situation for Adidas right now. So if you want to see if Adidas is a good buy right now, we should also take a look at the financials. And as we can see, the first thing what we are looking for is revenue growth over the last 5 years. So if we start from 2019, we can see it declined in 2020 because of COVID. It increased again, and now in 2023 it declined again, probably because of the high inflation and people try to spend less on not important things. So this is definitely not a check. So the first thing is already not looking great. So the next thing we are looking for is free cash flow growth, because that's how we pay the dividends and that's how we buy back shares. We use the free cash flow and we want this to grow in the last 5 years. So we can see here, this is 2019, it was around 2 billion. It decreased because of COVID and increased again after COVID, or like close after COVID. And then 1 year it was even negative because they had a lot of drama, I think, with Kanye West and other problems. And now it's positive again, about 2 billion. So it's barely increased over the 5 years, but it's still a check mark. So the next thing we will take a look is free cash flow yield should be over 4%, because this shows also the valuation of this company. So if it's under 4%, it could be that this company is overvalued. So we will take the 2.14 billion, and then we need to look the market cap. So the market cap is 38.7 billion. So we take this and we take the free cash flow and divide it with the market cap, and then we will have the free cash flow yield. So okay, we have it. This is around 0.055. So it means around 5.5%. That's actually quite good. So they have over 4%. It could mean they are undervalued, but not necessary. So the next thing I'm looking for is debt to free cash flow ratio under 5. So this means we can pay back our debt in 5 years with our free cash flow. So it's very important to take a look at the debt, because we don't want to have too much debt. That could mean the company could be in trouble if they cannot pay the debt back. So we can take a look here. They have a long-term debt around 4.47 billion, but actually what's more interesting is long-term debt excluded capitalized leases, because they have leases for shops and for like retail selling, so they need to pay this as well. So we need to take it out, so we better use the 2.43 billion. So, but we should also take a look at the short-term debt. and the short-term debt is around 1 billion. So yeah, we will add this. We will take the 2.43 plus the 1 billion, and then we will divide it by the free cash flow, and the free cash flow was 2.14. So how much is this? It's already looking good, actually. Okay, yeah, it's 1.6. So that's actually really good. So they can pay back the debt in 1.6 years with the free cash flow. So we can also take a quick look at their cash on hand, so how much money they have in the bank. And they actually have a good amount of money in the bank, 1.48 billion. So that's looking really good, actually. So we can make a check here. So the next thing I'm looking for is shares outstanding decrease, because this means that they're buying back shares. It also means that they believe in the company, but it's not necessarily good always, because if the company is overvalued and they buy back shares, this means they buy back shares for an expensive price, and that's not really great. But I think some years ago Adidas was undervalued, so if they buy back shares, it would be a smart idea. And we can also see here that they did buy back shares over the years, and a very good amount, especially in 2022. They bought 6.5% in shares back. This is really good. So yeah, it's a check here too. So it means 4 checks and 1x in revenue growth. But besides that, it's quite looking good. But we also have to consider this is a clothing company, so sometimes they will sell a lot of products, sometimes not. It's like they have to trending, they have to be popular, they need to have the hype. So we have to keep that in mind. So let me give you a conclusion. I personally wouldn't invest in Adidas right now. So they are the clothing company, they're really depending on hype, on popularity. So with the boycotts going on, it's not looking too good. I think a lot of Palestinians and Palestinian supporters and also Israeli supporters will stop buying Adidas products. So that's not a great situation for them. And I also believe in their next financial earnings, they will selling less than expected. So that's my prediction. But it could go the other way too. So we don't really know that. But I wouldn't invest in Adidas right now.